Hello folks, Brendan Chapman with you today. It's another edition of TheoTrade video for Monday. Boy, it's June what? We're getting on June 10th, 2024. Big day today. Nvidia splits. Apple has their WWDC, whatever they call the event. They're introducing AI, and apparently just saying AI does not give you as much as it did previously. As Apple sold off today. And that's all a precursor of what's going on Wednesday with CPI, the FOMC policy statement, Jerome Powell's presser, and of course we got PPI later in the week as well. We'll kind of talk through those things in today's video. Sorry. All right, let's get rolling. So the S&P 500 is higher today. So we opened up slightly lower. We rallied throughout the session. And overall, I mean, again, we're just kind of in the mode of consolidating over the last several days. A key component to this, of course, is Nvidia. Nvidia had their earnings announcement. The stock gapped up. Everything's honky-dory. They blew out. They guided higher. And the stock subsequently went from about 95 to as high as 125. That's kind of a big deal. I mean, you just pulled forward a tremendous amount of future growth to about a 2 to 3 week period. And going through a split, a 10-for-1 split, just basically says what? The stock price is a tenth of what it was yesterday or Friday. Now, what does that mean? Ultimately, nothing, right? I mean, at the end of the day, we're just adjusting the price. I mean, during my session, I asked the group, I said, hey, who determines the share price of a stock? I mean, think about it for a second. Who determines if Nvidia's trading at 120 or 1,200 or 3,000 or $1 million? Who determines that? And a lot of the comments were, buyers and sellers, the market maker, the plunge protection team. There's a lot of comments that came out about that. And ultimately, the price of the stock is determined by who? By the board, right? The board votes on where they want the share price to be. Back in the day, I remember Urban Outfitters, this was like in the 2000s, stock price was just going up and up and up and up and up forever, and they wanted the share price to be in a very defined range. Once it got out of the range, they reduced the price by splitting. You just increase the shares, like reduce the price commensurately. Now, what we had with Nvidia is a similar stock split, a 10-for-1. It's now a tenth of the price. It doesn't change the valuation of the company. Does it change the ability to use Nvidia for the dispersion trade? What does that mean? It means what? They're buying what? They're selling options on the S&P, for example, maybe even Nvidia, and buying call spreads. As we look at the trade tab today on Nvidia, let's go to all products. Sorry, I got a new computer. Settings are, you kind of find out where your settings are missing. But anyway, as we look at Nvidia, we look at today's option statistics. You'll see the implied volatility's dropped a little bit. This was up in the 50-plus percentile recently. Now we're down to 35%. Overall, the volatility is still pretty high, right? I'm like, this is a $3 trillion company with an implied volatility, average implied volatility around the 30-day window at about 44%. I mean, it's extraordinary, right? For a stock to be able to move around this much at this size. It takes a significant amount of volume to be able to create those dynamics. As you look down here at the options, 3.1 million calls traded, 1.9 million puts traded. That's about what, 3.6 or 3.3 times the average over the last 5 days. What it means is like we're not exactly back up to the same level if you figure that the options and the volume on Friday should be about 10 times more than today. It's only about 3.6 or 3.3 times the average. So the amount of calls and puts traded today, while balanced between the market at the bid, ask, or between the market, same for the puts for the most part, we're not trading at quite the levels of volume we were previously. How is this going to change for the stock? Okay, again, I'm not, volume-wise, we're seeing, 300 million shares traded today, and there may be some adjustment historically for the split. But the point is that today wasn't exactly a high volume day either, right? If we compare last Friday, I'm assuming the volume's been split adjusted as well. So the idea is that today's volume was rather light. What does it mean for Nvidia in the future? Why are they cutting in the first place? Are they trying to become part of the Dow? The fact of the matter is, if they become part of the Dow, generally speaking, the performance isn't amazing. And so, look at Apple as an example. But the point is that we're kind of priced for perfection up here. I mean, nobody knows for sure, but we just ran up a significant amount for this size of company, and it's going to take a significant amount of continued activity, volume or otherwise, to continue to drive Nvidia higher. Doesn't mean it can't, but the idea is that it's going to take a lot of volume. In fact, Don did a catapult today on Nvidia. I mean, one of the positives in Nvidia, let's go out to 67 days here. Got to expand the strike offering to all here, but if we scroll out of the money on the call side, is that generally speaking, we've had some pretty good call skew. Now, what does that mean? That the call volatility is rising in the out of the money. Now, it's kind of flattened out of late. I'm going to have to scroll a while here to try to get into view, but let's change this to implied volatility. What you'll see is that volatility is kind of flattish out here, meaning that what? You could buy a call and sell a call, buy a call and sell a call. As you get out further, it kind of dips a little bit, but we're pretty dang flat all the way out here for a long period of time. We start to tick up a little bit as we get out towards 150. So what does this mean? It means you could buy a lower strike and sell a higher strike. You can also what? You can also sell a call on something, right? Sell a call on the S&P, the MES. We do a lot at TheoTrade. We do a lot of call selling using futures options because of the advantageous span margin. And if you're not familiar with span margin, feel free to join us and you'll find out exactly what that means. It allows you to sell options with a very small account as little as $2,000. But if you're out here around the 30 delta, buying 44.5, you can construct a several point or 5 point spread, and the vol skew is not unfavorable. The volatility's come down, which means now all of a sudden that 30 delta is closer to the stock price. So there's some advantages, and you're selling options premium in order to finance the purchase. That's called a catapult. But the point is it's part of the dispersion trade. So if Nvidia takes off here and outperforms the S&P 500, you can continue to kind of parlay that. If it doesn't, guess what? It's paid for. You just made it from the call, and you can buy back your calls at a profit as well. So the idea of Nvidia, we may be priced for perfection, but if not, if the market's going to take off from here, it's probably going to need Nvidia and other companies to continue to perform. As we look at Apple, Apple today did not perform well. The stock was down 2%, nearly 2% at the close here today. And the bottom line is it appears that, look, Apple is under pressure. Why? It just seemed like the AI integration in their iPhones, for example, and other products isn't bringing the cachet. It used to be just say AI and your stock price goes up. Just say your device is going to have AI in it without saying it. I mean, any allusion to AI has generated higher stock prices this year. Apple finally announces kind of their AI offering, or the beginnings of it, at the WWDC 2024 event. And guess what? Stock sold off today. And it appears that there may not be any originality to the stuff that they've introduced. So they're just trying to play catch up right now. And just saying AI does not do it, at least for today. Apple's down 2%, with Apple up against recent highs. And again, some not great news, ultimately, right? This may be priced for perfection as well. Can the S&P hold up if Apple and Nvidia sell off from here? I mean, probably not. Can it hold up with just Apple? Yeah, we saw that today. But did the other components move higher? Yes, Microsoft up 1%. The S&P, the SPY, for example, finished about 0.3% higher. What about Meta? Into the metaverse here, right? Up nearly 2% today. So again, they're carrying the market on a day that's relatively weak. Google basically on par with the market's performance, only at 0.3%. Amazon, another component added to the Dow, and stock kind of languished for a while, but Amazon adding nearly 1.5% today. So basically, we're going back to the monsters of tech, those 7 names, with the exception of Apple today. And again, is Apple telling us something that's in the works for the broader market? Maybe, right? But again, we've got key announcements this week. And if we just take a quick peek at Forex Factory here, we can see the core CPI expected to be 0.3%. It's a big deal, right? Core strips out food and energy. When we include food and energy, we're seeing we're actually ticking down to 0.1%. The core supposedly is the main number that the Fed probably looks at more PCE being the most important number, but we're still seeing 3.4% year-over-year increase in CPI. The same day, we've got on Wednesday the Fed funds rate announcement. We're fresh on the heels of what Bank of Canada and the European Central Bank produced last week, which was the first rate cuts. And initially, it didn't exactly boost the dollar like you thought it should. If we look at the euro/US dollar, you would have thought when this was first announced last week that, first announced right here, that the dollar would have sold off. It didn't. It wasn't until the next day we started to see some traction on the downside, and that was the payrolls print, right? We saw that wages were increasing at a faster rate than expected at 4% annually. So it was a big deal to see inflation concerns rear its head, and all of a sudden the dollar moved significantly against the euro on Friday, and today we kind of came off our lows a little bit, but we're breaking a support about 108, so $1.08 to 1 euro. And so again, the dollar's gaining ground against the euro. If we look at the USD CAD, it's going to be the opposite. Dollar strength would be upside. And we saw that ultimately the CAD did not sell off much on their announcement last week. It wasn't until the payrolls print came out on Friday that saw that the dollar strengthened vis-a-vis the CAD. And so we're positioning right now, and if we look at GLD, gold, as a proxy for the dollar as well, we can see in real terms on Friday the dollar strengthened substantially. Okay, back up against support here. So where is the dollar going? Virtually all the gains in the S&P 500 has been a result in the last year, has been a result of a weaker dollar. If the dollar strengthens back to June, July levels, again, if we're looking at it and stripping out the dollar's positive effect, the S&P in gold terms is back around here from June and July where we were last year. Okay, so if the dollar gets back to the same level it was last year at this time, the S&P could be dramatically lower from the current level because all of the gains have been based on what? Dollar weakness. And that's a big deal. And so again, seeing the dollar strengthen significantly, seeing the Fed potentially boxed in the corner of inflation, not allowing them to cut with other foreign central banks, places us in a very difficult position. Do you care about inflation, or are you just concerned about the banks? And if we look at the net, can't got the percent change today, but if we look at financials today, XLF was down slightly. Treasury yields moving higher. This is not a great situation for financials, for utilities, for real estate. If we look at the gainers here, net change, you'll see XLU was the second best performing sector in the market in terms of, I guess, net change dollar. I don't have my connection here. But XLU, right? XLU catching a bid today despite the rise in yield. I mean, are they expecting the Fed to be dovish here? Are we expecting, are we expecting the 10-year to continue to decline with the thought that the Fed is going to cut rates? There's a lot of questions, more than we have answers. And we're going to see some of those answers be revealed because of data coincident with the FOMC policy statement, which they're not expected to do anything. They're expected to keep rates the same. It's going to be the Powell press conference afterwards that's going to create the biggest move in the market. And again, are they going to turn tail and run with the European Central Bank, not care about inflation, run with the Bank of Canada, or are they going to stand and fight inflation, ultimately creating a stronger dollar and potentially lower stock prices? Because again, stocks, S&P 500 is priced in US dollars. A stronger dollar, all things being equal, is going to create lower prices unless what? The market can create value apart from the dollar weakness, which it's not been able to do for the last year. All of this run, again, we can look at it in SPY plus GLD. We'll strip out the effect of the dollar. We'll go to studies here, load study set. What does this mean? We'll go to pairs ratio. So we're taking a relative strength line, SPY divided by gold, right, GLD. S&P's been gaining some ground the last couple of months here, okay, versus gold. But notice where we're at right here. This is the same level we were, for example, in July. Not far off of the level we were at the end of June. So what this says is that the market's significantly higher than we were back then. But what it tells us is that at this point in time, we're in a position where all of the gains in the market for the last year has been a result of a weaker dollar. Now, stocks like Nvidia have gained value and outpaced the dollar's weakness. The dollar's only helped it further its advance. We're getting a straight data point here, but the point is that Nvidia, Apple are these companies priced for perfection at these levels, and if they start to fade, we start to see a stronger dollar. We start to see a hawkish Fed, higher inflation. These are going to create downside movements in the broader market, and technology just may be the sector that begins to lead to the downside as it retests the prior high back here from earlier, so from late last month. So again, a lot of stuff coming up here, okay? We got to watch it and look for those opportunities. And again, if the yields continue to rise, look at interest rate sensitive parts of the market, like for example, real estate. They may be priced for perfection up here to the downside, right? Utilities are coming off of a low. This is one where, yeah, look, I mean, it's not exactly we're not exactly testing highs here, but watch for a break below today's low in utilities. But then also watch for technology. Watch for those names that are relatively stretched, like an Apple, testing resistance down 2% today. You can look for those downside moves and trade them using vertical spreads, right? Buying a higher strike, selling a lower strike, maybe going out as far as like a 40 delta, right? And that'll give you a low risk, high reward, lower probability, but again, you can close it pretty readily for 60, 70, 80% gain if you get a little bit of momentum and if that spread goes in the money. Well, folks, we got a lot of watch this week. Join us back with our other videos as we look at what happens, and especially on Wednesday as we figure out the aftermath of the Fed and Jerome Powell. What did you do, Jerome? We'll find out on Wednesday. Anyway, have a great one.